Joining us now is our great friend, NEC Director, Mr. Kevin Hassett. So, Kevin, let's see. Since the April lows, the Dow's up 33%. The S&P is up 39%. The NASDAQ is up 50%. 1,200 today, over 50,000. Congratulations, America. What are you thinking here? You may have heard my riff. What do you think? What's driving this thing, Kevin Hassett?
Yeah, well, first of all, I got to say that the market was very nervous earlier in the week because the market didn't understand something that Art Laffer and Larry Kudlow have been teaching us forever, which is when there's a productivity boom, like we're seeing because of artificial intelligence, that everybody's better off. That's where prosperity comes from. If you go back to the dawn of the pre-industrial age, right, it was the introduction of new inventions and so on that built our wealth over time. And right now we're in the midst of a productivity boom unlike anything we've ever seen, and it's being fed by great policies. We've got a big, beautiful bill that's making it so that the people get to expense when they build these AI centers. And when all the capital spending comes in, it's up 6.5% since the big, beautiful bill, then that makes everybody's wage go up. And one of the things I can remember a few months ago, every time I came on TV, people said, oh, but the people aren't feeling it. And I've said, and you taught me to say this, people will feel it when they see it in their wallets. And guess what happens in January? That's when people often get their annual salary adjustment. And all of a sudden, the consumer, even the Democrats of the Michigan survey are celebrating because they're seeing it in their own wallets. And so the people are seeing it in their paychecks. We're seeing it in the surveys because now they see, oh, gosh, look at all the extra money I got in my paycheck. And we're seeing it in equity markets. And so it really is a kind of golden age. Final thought, we're now seeing GDP down. GDP now down a little bit from the 5 to 4.5. But if we get that, then that means we had a 3% year. And the IMF forecasted we'd have a 1.5% year. And so we've doubled the expectation of, the IMF, the big forecaster. And we did that even though Joe Biden had one quarter. And so this is what Trump's economy looks like.
Yeah, Joe Biden's one quarter was a negative quarter, too. That was the first quarter of the year. And by the way, you're doubling the Fed. The Fed was 1.7 right after the election in December of 2024. So you're spot on. Kevin, talk a little bit more, if you would. The refunds are coming in. The tax refunds are coming in. And that is, I hadn't thought about that. January is the first month for that. What's your estimate there? And that's going to make a big gain of wages over prices, over inflation, won't it?
Right, yeah, and it's one of the things that usually there's a big April seasonal because people fill out their tax returns late. And I would urge everybody who's an overtime worker, everybody who got tips, everybody who has Social Security to file early. And Secretary Bassett has built a top-notch team that's going to make sure that they get their refunds as fast as possible. But don't wait till April because they didn't, the no tax on tips and no tax on overtime, that wasn't adjusted by your payroll guy at your firm. It's going to come out in your tax return. And so file now. And what's going to happen, what we expect to see happen, is that all that extra wage growth, it was $1,300 not accounting for the tax refund, is going to be added to by the big tax refunds, and we're going to have a consumer boom unlike anything we've ever seen. And that's why we're very, very bullish for much more than 3% growth this year. And that's why even the naysayers at the Michigan survey are bullish as well.
Well, that's the thing. The Michigan survey, John Carney, Breitbart's John Carney has looked at it. I mean, it's like a poll that's heavily weighted towards Democrats, and they're the ones that are pulling that thing down. Now, if they stop pulling it down, which appears to be the case for 3 straight months, even they may be satisfied that this inflation hasn't materialized. And, on the tariff point, the tariff inflation never really did materialize.
Right. And it's just the way you and I said, because if the Chinese and other countries are dumping their stuff into the U.S., then by definition, they're supplying things inelastically. They're going to bear the tariffs. And that 100% is what we've seen. In fact, import prices have dropped since we introduced the tariffs, right? So they're actually cutting their import price so that they can maintain market share in the U.S. And the reason it actually makes sense for them to do that is the U.S. is growing so fast, and U.S. firms and U.S. Consumers are making so much money because of the Trump economy that you want a part of that, even if you got to pay a tariff as an admission ticket.
Kevin, are you, when you estimate and re-estimate, so I would think the profits share of GDP is going up because we're seeing record profits, and it's continuing. It's not a one-time thing. The profit machine continues, and that's really the backbone of this stock market. I know there's some froth in some of the stocks. There always is. But the reality is profits are driving this thing along with rapid economic growth across the board. I mean, the profit story is part of the productivity story.
It is, and in fact, you remember that in the last quarter, we had the largest share of U.S. corporations that surprised earnings on the upside that we've ever seen in U.S. history. But I'm not sure I agree with you. Profits are soaring, for sure. I'm not sure I agree with you on the share, because what happens, right, is that wages catch up with all that capital formation, but they usually do it with a lag. And so we saw the profits skyrocketing in the first, or the second half of this year, but now the wages are catching up because people usually get their salary adjustments at the beginning of the year.
What's the wage story look like to you? And in general, right, wages relative to inflation. So that was, wages were below inflation for most of the Biden years, okay? And it cost them a lot of money, whatever the number is, $4,000, $5,000 of losses.
Yeah, it was about $4,000.
What does that look like to you now? What does it look like?
Well, last year, it's looking like we're going to be at about wages growing about $1,500 a family more than inflation. And we expect this year that it might even be another $2,500 or so. If we do that in the first 2 years, then we'll have increased real wages by $4,000, which was, you might recall, was the promise that President Trump made in 3 to 5 years after TICTA. So we're going about twice as fast as we did in that booming Trump economy.
All right, terrific, terrific. Keep selling it, Kevin. Tell your colleagues in the White House, sell it.
And I can't wait to see you next week in the White House, Larry, too.
All right, thanks, Kevin. Terrific stuff. Kevin Hassett, NEC Director, really the best of the best.